Gold's moving today. You have gold moving lower here today, continuing to push down further. I am potentially looking at a situation in which I might get trailed out of my position. We'll see. Price has pulled back a little bit, right? Come down into this area. The question now becomes, can it hold this area of support? I have a long position that has come back against me. And I just quickly want to discuss, this is the downside to trailing stops. When you guys, watch a video or a stream where I'm talking about a really big winner, obviously that's more fun for me to talk about. But there's also situations like this where I had a really good winner and I'm sitting here watching a lot of my profits get pulled away from me. And it wouldn't be fair if I only ever talked about trades that are going well. This is a trade that was going well. I trailed my stop loss and I put it right below structure. I've been doing this for a long time on YouTube. And as you can probably imagine, or maybe you're already having this thought, Nick, why didn't you lock more in on the trade? You should have locked it in. It would have been, you could have taken profits and it would have been, I've gotten those comments for years. And before I know that's a natural question, why didn't you close it? But you have to acknowledge when you are having a hindsight thought, right? When you are thinking in hindsight as a trader, stop yourself and pause and just say, without hindsight, why did you do that, right? Or why did you do it a certain way? So I've been looking for a higher low on gold in order to trail stops further into profits, right? So when we look at gold moving up substantially, I was looking for some sort of either a breakout through these highs in order to trail a stop loss further, or a higher low to form on the daily chart. And so we didn't get that. Instead, now we see price coming down. And it is easy in isolation to look at a trade gone right or wrong and say, this is how I'm always going to do it from here. I say that because I know what it's like for many traders, myself included, who chase their tail with their strategy. They change what they're doing based on what the market has been doing. So in this circumstance, there's a temptation to be like, well, instead of using market structure, you should just trail it based on anytime you get a big move, you should be 1% below. That should be where your stop loss is. And the problem is, in this example, that might have been the right play. But as a trader, you have to think about what you're doing over the next 1,000 trades, not over this trade only, right? So have I given back some gains on my gold trade? Sure. Is there a possibility that this actually ends up being a very small profit for me? I'm out of the trade. Very possible. But you have to rewire your mind a little bit when you're trading, because it's really, really easy to say, oh, I need to trail tighter because trailing loosely means I give back too many gains. Maybe in this circumstance, but trailing loosely also means sometimes you hold on to some monsters without getting whipped out of the trade. Everything has a pro and con in trading, every single thing. Time frame selection, strategy selection, trend following, mean reversion, fundamentals, technicals, sentiment. Every single thing in trading has a positive and it has a negative. You are not going to find a system in which everything is good. You make big wins with a high win rate. Doesn't exist. You're going to have to kind of find a system that you are comfortable enough to accept the pros and the cons. And for me, trailing stops with a relatively loose stop loss has huge pros and it has huge cons. So there is a possibility. Now, gold could reverse. Like, we could find support. That's why I've got my stop where I've got it. If price can hold this, then excellent. I'll trail a stop further, see if I can catch, that leg move higher. But if it doesn't, if it breaks lower, so what? Take a profit, move on. That's it.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment, and free articles from our analyst Frank that include things like edge finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So that's just a little bit of trading psychology as well as technicalities of what I'm doing with gold here this morning. I do think it's really important as traders we sort of acknowledge that is a lie that a lot of traders tell themselves. So I need to, I should have done this. If you could remove these words, should have, could have, and would have, you should take these words and throw them off of a bridge. As a trader, that is the better call, I think. So anyways, they're no good. These words will just get you in trouble. So I'm looking at gold here, up 0.85%. I'm sorry, down 0.85%. If gold shoots down another 1% from here, I'm going to be taking a small profit on this trade. Not glamorous at all, not an exciting trade, but just another trade to take. Today, I'm also going to be taking a look at a chart request for a member in our Discord VIP group who asked for me to discuss the euro pound trade, which has gone totally wrong for me. Look at this. What are you doing, Nick? I'm short here. I'm short here. I'm short here. And I'm thinking about taking another short. Am I a madman? Am I insane? Well, let me talk a little bit about it. Because again, today we are talking about trades gone wrong because I've got a couple trades that are not doing well. And I think, I hope that by talking about trades that have gone wrong, we can learn more. There's a lot to learn from trades gone wrong. Everybody wants to talk about trades gone right because it's more exciting and everybody wants to talk about making big wins. But what do you do when a trade goes wrong, especially with my trading style? So just for context, right? I am down on euro pound, a whopping total in my account. I'm down about 1% in drawdown between all three trades. So my drawdown right now is absolutely tiny on euro pound. So you might say, well, how? How can you have euro pound short positions going against you like crazy, and yet you're only down 1%? Well, it is the secret weapon. It is the secret weapon to trading profitably in FX and in every market. Small positions. That is it. This is the secret. It is out in plain sight. The biggest secret in financial markets is trying to chase big gains is what causes people to lose money. The biggest secret is out in the open. Slow and steady wins the race. So I have small positions on the short side of euro pound. This trade has gone against me. I've been wrong about the direction, wrong about the timing, and yet I'm only down 1%. How? Again, my trades are really tiny. I'm using really small size relative to my account, and I've stepped in, I've legged in, as they call it, dollar cost averaged in to a short position. Now, again, this type of move is the type of move that if you were inappropriately risk managing, you could blow your account on that kind of move. But with really small sizing, let me zoom out and show you the big picture for euro pound. This is a currency pair that typically over the long term chops back and forth. This is a currency pair. The two economies are reasonably correlated, the UK and Europe. And so if this thing were to keep grinding higher, is that disaster for me? Nope. I am willing, as crazy as it may sound, to see the euro pound continue to move higher against me. In fact, if that happens, I can get a bigger sized short position. I'm not currently adding to the trade because I don't necessarily love the fundamental factors right now. The euro looks really strong. So again, here's some common questions that I get on this. If you're dollar cost averaging, what does that mean? That means taking small short positions in bite-sized pieces over time. This is a long-term approach. It is not suitable for like trading the 5-minute chart. That's not what I'm doing at all. I am short the euro pound with small size in 3 different spots. And currently, I don't like the idea of adding more shorts to the euro pound. In fact, the edge finder is giving it a strong reading. So it very well may in the short run continue to trend higher against me. So then why am I not just accepting the loss? Well, because my position size is so small that I haven't really experienced any significant loss just yet because my size is so tiny. So if this thing continues to move against me, I can start winding out to the weekly chart and I can say, do I want to add new shorts? Not really, because the edge finder doesn't agree with it. But if we were to get, a push up into this area, we could see some rejection. And if we started to get edge finder confirmation, I may actually add again to the trade. But right now I'm just willing to hold the position because it's so small. It's not doing any damage to my account. I have a short position. If it rolls over, I can probably get out of this trade for break even or a small loss. And that's what I'm going to try and do. I'm going to wait for some kind of price reversal. Most of the time, vast majority of the time in FX especially, FX is notorious for being choppy back and forth markets. If this thing rolls over, right, I can get out of my trade on any sort of real pullback in this market. So the difference here is that a lot of times when traders try and do dollar cost averaging, what they do is they go way too heavy. And when one move like this happens, they blow up. But with small enough size, this is what long-term currency trading looks like. A lot of times long-term currency trading is waiting for price to give you some sort of move back the other direction and just kind of trading that inventory in and out of your portfolio. So what I do in Forex is not particularly attractive to a lot of the day trading crowd and the Forex hype stuff that you see all over the internet. But I trade Forex in a way that has worked really well for me for a long time. I dollar cost average longer term, and I look for this move to move lower. I'm not always so early to the idea. A lot of times I take that first trade and capture a move, and I just take that and I move on to the next one. But again, euro pound, even though it's moving sharply against me with small enough size, I really am not phased by it. It's a small trade and I could add to it if I wanted to. I'm not going to. I'm just going to let it play out. And who knows, we might in the next month, we might get a sharp push lower, in which case I might be able to get out of this collection of trades that I've gotten out of. But it's definitely longer term focused. I also have a similar position that has gone wrong on CAD Swiss. The positive of CAD Swiss and euro pound is they give you positive swaps for holding them. So even though I'm sitting in 2 positions that have gone wrong on CAD Swiss, and I'm not super interested in adding a more to the trade right now, I'm still getting paid positive swaps. I've collected positive swaps every day since taking these trades, which it adds up. CAD Swiss longs over a long duration. The positive swaps that you collect, the credit that you get paid for holding this due to the interest rate differential between Canada and Switzerland is positive. So you get paid to hold this trade. You get paid to wait, essentially. So if we get some sort of sharp move higher on the Canadian dollar, I could potentially get out for break even on the actual price movement, right? 6,100. If I got to move to 6,100, I could take profits on this trade and take a loss on this trade, be break even between the 2 longs, but make substantial income just from holding the positive swaps that you collect from this, right? So I'm making money on the swaps, and if the trade comes back to break even, then I can collect profits on that. Any thoughts on GU, Nick? Yes, I'm actually short GU, which came back into play here for me today. Believe it or not, I'm actually starting to tilt in favor of dollar bullishness. So let's talk dollar for just a second. I don't love the technicals just yet on the dollar. I don't think we have really strong technicals, but the dollar is shaping up, in my opinion, for a reversal. It's turning around, in my opinion, slowly. Let's take a look really quick at our economic heat map. So whether you trade gold, the dollar against euro or pound, whatever you trade, this might be interesting to discuss. So we had jobless claims yesterday. Once again, really strong labor statistics. We also, I want to get to Powell and Trump in just a second because there was something interesting there. Mortgage applications were strong. We had, let's see, what else? CPI, inflation pretty mixed, right? You had PCE, which ticked higher, PPI, which ticked lower, and CPI, which ticked higher but was in line with expectations. So a little bit of a mixed sentiment for inflation, but not so mixed for jobs. Pretty strong for jobs. Non-farm payroll was better than expected. ADP was a miss, but then JOLTS was strong. Jobless claims were strong. Unemployment rate was strong. Wage growth, negative. Missed expectations. So the net aggregate is the US dollar impact on the economic heat map is actually officially tilting bullish. This is the first time in a while. We haven't had this in a while, but the US dollar economic heat map is actually tilting bullish, which could suggest that the dollar index may be in the early formations of a bigger reversal. We'll have to see, but we have gone from an expectation, like the market kind of got hyped up on the idea of 3 rate cuts this year. Now it's down to 2, and there's a possibility, right, that it could go to 1. We could see 1 rate cut this year. I mean, that labor market is really strong compared to expectations. Somebody asked me about the DAX and gold. I will definitely be taking a look at those things in just a minute here, guys. Thank you for your patience on it. So we'll see, but the dollar index may actually be, in my opinion, shaping up for a longer term reversal. Now, I want to be clear, the technicals are still bearish. We could very well see, price go back to test these lows, but I think what you'd be looking for, and what I'm looking for from a bullish perspective on the dollar, would be momentum to change directions in the form of a key breakout above this 99 level. I think that on the trade deal stuff, we have a little bit more security than we previously did. That could be a strengthening factor for the US dollar. We also have, I don't think personally, I could be wrong about this, but here's my opinion on the Powell situation. I don't think he's going to step down. There's all sorts of speculation going around about, is Powell going to step down from his role? There's actually an argument that he should for his own sake, because if the economy does poor, that the administration is going to blame him. And if the economy does well, then the administration is going to take ownership of that. So he's kind of in this sticky situation. If inflation goes up, he's going to get blamed. If inflation goes down, he's not going to get the credit. So it's a sticky situation for him. But I still don't think that he's going to leave his post. I think he's probably going to stick it out, and I don't think that Trump is going to remove him either. So I could be wrong about that, but that is my current opinion on that. And I think Powell remains more on the hawkish side, which favors some modest dollar strength as well. So when it comes to the US dollar, what am I looking to trade it against? Well, let's take a look. If I look at the economic surprise meter here, we have, give it a second to load here. If it wants to, maybe it doesn't. We're missing like 3. If we look at the US economic heat map, again, getting like a 60+% rating now. So here's US dollar, right? In terms of which currencies look stronger versus weaker, the US dollar actually is now getting into the positive territory. New Zealand dollar is still our strongest in terms of economic outperformance relative to expectations. The euro is also strong. The Swiss franc is also strong. Our weakest on the list are going to be the Canadian dollar and the British pound. So if I want to look at maybe pound against the dollar, what would be the dynamic here? It's not a huge separation, but I would lean just slightly short on the pound against the dollar. It would also hedge out a little bit of my exposure on the euro pound position, which I was talking about earlier. So if I go to pound against the dollar, right? We're sitting at support. Technicals, I still think favor the bulls here on a bigger picture. But if you get a breakout of these lows, that to me could signal that the pound dollar is tired and may be rolling over. Did you see the Trump tweet? No, Finley, tell me what the tweet was. The Powell situation looked like it really did. It looked like it was a it looked like AI generated when I first watched it. So look at this, pound dollar down 0.5%. We've got euro dollar just slightly softer here today. Dollar yen looking strong. Dollar Swiss franc. Dollar CAD is another one that I'd be interested on the long side if and only if we got some sort of stronger reversal on a higher time frame. So I'm looking at the daily chart. I'd be looking for something like this, at the very least, looking for signs of a true reversal, a stronger push in the opposite direction. We also talked yesterday on my video. I'm not sure if you guys saw this, but on the video yesterday, I talked a little bit about market sentiment on, I'm going to specifically look at major currency pairs for a second. And what we can see here is that crowd sentiment on things like dollar Swiss franc is still very long. Crowd sentiment on things like euro dollar is still very short. So there is still a, dollar long from retail sentiment positioning. So that makes me a little bit cautious to rush into getting long the dollar myself. We typically use on this channel, I talk about it often, retail sentiment as a contrarian indicator. So for example, this contrarian signal tab right here is showing you a contrarian bearish reading is generating for dollar Swiss franc because the crowd sentiment is very bullish. And on euro dollar, it's giving you a bullish contrarian signal because crowd sentiment is very bearish. So when we look at the currency world, we take a look at euro dollar, we take a look at dollar Swiss franc, these things are getting strong contrarian signals. Trump has recently said Powell's a good man. Interesting. Is that what the tweet was, Finley? Let me know. So anyways, that's a lot of currencies this morning. I hope the currency traders enjoyed that. At my core, I've traded currencies for a long time. I've traded stocks longer, but I've traded currencies since 2016, I want to say. I got into it in 2017, but I started in 2016, late 2015. Anyways, so let's take a look at the indices for just a second. Indices still sitting at all-time highs. Still not too much to do for me on this. Would need to see a pullback. NASDAQ, S&P, Dow Jones. I've been doing a lot of stock trading. I'm not going to do it on this stream simply because this channel is not really dedicated to individual stocks. I do have a second channel dedicated to them. If you'd like to explore that, it is Trader Nick Stocks. Trump says there's a 50-50 chance of making deals with EU. Most deals done by August 1st on Fed's Powell. Got the impression yesterday from Powell that he might be ready to lower rates. Okay. Trump said he got the impression that Powell will soon cut rates. Okay. We'll see. Look, I actually agree that Powell should cut rates. I've talked about that a lot on the channel. I do think that by Powell's own discourse, he has mentioned that he thinks the Fed is still in a restrictive stance. Do we need to be in a restrictive stance? That is the question. Do we need to be in a restrictive stance? Well, ask yourself this: is inflation flaring up? That is when you want to be in a restrictive stance. You want to put a box, you want to control the economy from growing too fast when inflation is getting out of control. So the question is inflation getting out of control? Is inflation getting out of control? That is the question that we have to ask if we're going to determine, hey, should we be restrictive? So again, step one, Powell has mentioned he thinks the Fed is in a restrictive stance currently. Step two, when do you want to stay restrictive? When inflation is on the rise and problematic. Is inflation on the rise and problematic? It's trending lower. We did get a slight uptick, but most things in markets, including economic data, don't always trend in a perfect straight line. The general trend of inflation is still in the direction of cooling. We're getting close to that. We're closer to that target inflation rate. We could have, a down spell in inflation. We'd be there. We'd be pretty close. So if the Fed says we're restrictive, if Powell says we're restrictive, and then we look at inflation and we say, why are we restrictive? Inflation is no longer nearly as much of a problem. That is where I think the Fed can afford to cut rates. Because why would you take the risk to hurting the economy by keeping interest rates too high for too long? We've not really moved very far from where we were. We cut by, I believe it's 75 basis points from the highs. We've cut, but not very much. We rate hiked into oblivion to deal with the inflation scenario. Inflation's now down. We should cut rates. Now, let me be clear. I don't think we should rate cut by like 2% or whatever. Trump has come out and said, oh, we should cut by 1 full percentage point. I don't think that we should do that. I think that we should cut interest rates until the Fed feels that we're not in a restrictive stance. Powell says we're restrictive. Inflation is cooling, which suggests we don't need to be restrictive. We should cut rates to the point that we're not restrictive. Where is that number at? Well, there's smarter people than me that can figure that one out, but it does mean lower. I'm not a genius, and I know restrictive means rates are high relative to where they could be. Then cut them where you think they should be, but cut them. That's my opinion on it. So what does that do? What does rate cuts do? Well, causes the stock market to go up. Stock market loves that. Causes the dollar to be a little bit soft. That has already kind of taken place. Gold likes rate cuts, right? Silver likes rate cuts. Oil likes rate cuts. I'm already positioned long on oil.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.